The news is a weapon used against you. It is designed to make you act emotionally, to buy at the top and sell at the bottom. The headlines you read are not signals for you to enter the market. They are the final bell tolling, announcing that the move is already over. The public buys the news, the professional sells it. This is the great, painful divide in the market, and the side you are on will determine whether you accumulate a fortune or are rendered back to dust. The greatest mistake a speculator can make is to argue with the price. The second greatest is to believe a newspaper. Both will lead you to ruin with equal certainty. The market does not operate on what is printed in the morning paper. It operates on what insiders knew weeks or months before the ink was ever dry. The price of a stock does not move because of a headline. The headline is written because the price has already moved. This is a lesson that cost me millions to learn, a lesson etched into my very soul through years of disastrous errors. All of these hard-won truths are documented for your study in Reminiscences of a Stock Operator. If you wish to shorten your expensive education in the market, you will find the link in the description of this video and commit its lessons to memory. Fail to do so, and you are choosing to pay the market for the same education, but at a far higher price. I recall a time with a railroad stock, Union Pacific. For weeks, the air was thick with rumors. The talk in every brokerage in every corner of Wall Street was that the company was going to increase its dividend. As the chatter grew louder, the stock began its climb. It did not leap, but it ascended with a purpose, a steady, confident march upward. I watched the ticker tape, the real-time feed of prices and volume that you now see as a scrolling chart on your screen. The tape told me a clear story. It said, someone is buying and they are buying with conviction. The volume was healthy on the up days and light on the down days. It was the signature of intelligent accumulation. The price was moving ahead of the news. This is the first law you must understand. The price leads, the news follows. The day of the board of directors meeting arrived. The tension was palpable. The public, whipped into a frenzy by the newspapers, was poised to buy. They were waiting for the official word, the confirmation they so desperately craved. Then the announcement came. Not only was the dividend increased, but it was increased to a full 10%, a figure far greater than even the most optimistic bulls had dared to whisper. The news was spectacularly, unequivocally good. It was the perfect story. And just as you would expect, the public plunged in. The stock opened with a great leap upward on tremendous volume. The amateurs were euphoric. They saw the headline, they saw the stock jumping, and they bought with both hands, convinced they were on the ground floor of a move to the moon. They believed the news was the cause of the rally. They were catastrophically wrong. The news was the culmination of the rally. I sat in my office away from the noise, and I watched the tape. I did nothing. My method is not to guess. It is to react to the facts before me. The fact was that the stock, after its initial surge, began to stall. It churned. The volume was immense, the greatest of the entire move, yet the price made no further progress. Then, it began to sag. It slipped back from its opening high. What was the tape telling me? It was screaming a simple, brutal truth. The insiders who had been accumulating the stock for weeks on the rumor were now selling it on the news. They were distributing their massive lines of stock to the emotional, headline-reading public. The good news provided the perfect cover, the perfect wave of public buying into which they could unload their shares at the highest possible price. I saw this on the tape, and I sold Union Pacific short. I bet on its decline. The public traders who bought that morning were bewildered. They clutched their newspapers, pointing to the dividend announcement. "But the news is good," they cried. "It has to go up." They were arguing with the only thing that matters, the price. They were holding a piece of paper with an opinion on it, while the market was printing a fact on the tape. The fact was that the stock was going down. My short position became profitable almost immediately. The stock continued to decline for days as the last of the insider selling was completed, and the weight of all that overhead supply began to crush the price. This pattern repeats itself in every market cycle, with every stock, in every era. It is as timeless as human greed and fear. You see it in earnings reports. A company reports record profits, and the stock collapses. Why? Because the price had already risen for 3 months in anticipation of those profits. The report was simply the exit signal for the informed money. You see it in government announcements, in product launches, in legal victories. The cycle is always the same. Buy the rumor, sell the news. The amateur hears the news and thinks it is a starting gun. The professional knows it is the finish line. The reason that 90% of traders fail is that they operate on flawed premises. They believe they are in the business of information. They hunt for tips, they scour news wires, they listen to experts on television. They think that having a piece of information before someone else is their edge. It is a complete illusion. The only information that has any value is information that no one else has. And I assure you, you will never be given it. Any tip you receive has already been passed through 100 hands, and the people who gave it to you are most likely trying to sell the very stock they are telling you to buy. Your business is not information. Your business is observation and reaction. You are a student of the tape. Your chart, your price feed, is your entire world. It contains all the news that matters. A stock that is being accumulated by insiders will show you through its price and volume action. It will hold firm on bad market days. It will rise quietly on increasing volume. It will form a solid base. It tells you its story right there on the screen. A stock that is being distributed will also tell you. It will churn, with high volume but no price progress. It will fail to rally on good news. It will show weakness when the general market is strong. The tape tells no lies. Newspaper headlines, on the other hand, are often the most artful of fictions. So, how must you operate in this world of illusion and fact? You must invert your thinking entirely. You must begin to see news not as a signal, but as a test. The news itself is meaningless. The market's reaction to the news is everything. This is the secret to turning the public's greatest weakness into your greatest strength. Let us say a piece of astoundingly negative news is released about a company. A lawsuit, a failed drug trial, a terrible earnings forecast. The headline is a disaster. The public, driven by fear, begins to sell indiscriminately. The stock gaps down at the open. Your instinct, like theirs, is to panic, but you must resist. Your job is not to act, it is to watch. You watch the price. Does the stock continue to cascade downward all day? Or does it find a bottom, absorb the selling, and begin to climb back? If that stock, in the face of the worst possible news, refuses to stay down, if it closes near its high for the day, you have just witnessed a signal of immense power. It tells you that the stock is in hands so strong they are willing and able to absorb every share the panic sellers can throw at them. They know the bad news is temporary or irrelevant. They are using the public's fear as their accumulation opportunity. The failure to go down on bad news is one of the most bullish signals that exists. The opposite is equally true. When the news is wonderful, as with our Union Pacific example, you watch for the failure to rally. If the stock cannot hold its gains on the best news imaginable, it is a sign of profound weakness. It tells you that a wave of selling is overhanging the market, so powerful that even euphoric buying from the public cannot lift the price. This is your signal to exit any long positions or to initiate a short sale. The inability to rally on good news is a warning of an impending decline. You must train yourself to become a clinical observer of market psychology. The news is the stimulus. The price action is the response. Your edge comes not from knowing the news first, but from correctly interpreting the market's response. The public is playing checkers, moving their pieces in reaction to the headline in front of them. You must play chess, thinking about what the headline means for the balance of supply and demand. In my time, we had to guard against the whispers of inside information passed around the brokerage houses. These were the bucket shops, the unregulated brokers of the day, where rumor was king. Today, your challenge is 1,000 times greater. You are bombarded by a constant stream of information from financial television, websites, and social media. This entire apparatus, whether it intends to or not, functions as a massive distribution machine. It generates the public excitement, the fear of missing out, that allows the professionals who bought months ago to quietly exit their positions. When you see an analyst on television pounding the table, telling you a stock is a strong buy after it has already doubled, ask yourself, who is he talking to? He's not talking to the professionals. They are already in the stock. He is talking to the public. He is generating the buy orders that will allow the early money to sell. When you see a social media platform erupt with excitement about a meme stock, understand that you are witnessing the final, frantic phase of a distribution. You are arriving at the party just as the smart money is slipping out the back door. The market is a game of transferring wealth from the impatient to the patient, from the emotional to the disciplined. News is the primary tool used to trigger the emotions of the crowd. It creates urgency, greed, and fear. Your defense is to have no opinion. Your opinion does not matter. My opinion does not matter. Only the market's opinion matters, and it expresses that opinion through the unequivocal language of price and volume. Therefore, the ultimate rule is this: you must learn to trade without the news. Filter it out. Ignore the headlines. Disregard the expert forecasts. When you are analyzing a potential trade, the news should be the very last thing you consider, and only for the purpose of gauging the market's reaction to it. Your decisions must be based on the principles of trend, of price action at key pivot points, of sector leadership, and of volume confirmation. These are the elements of speculation that have substance. They are the facts of the case. The news is merely courtroom gossip. Here is your new law. Etch it into your mind until it becomes an instinct. When a piece of news is released, you are forbidden from acting on it. Your job is to sit on your hands and watch the tape for the remainder of the day. Did the stock absorb the news and hold its gains? Did it reject the news and reverse? The closing price of that day is your first piece of real evidence. If you buy a stock because of a good headline, you are doing nothing more than providing an exit for a smarter man who bought it weeks ago in the quiet anticipation of that very headline. He thanks you for your service. Your account, however, will not. The market is not a charity, and it does not pay for emotional reactions. It only pays for cold, disciplined execution based on the revealed facts of the tape. Stop reading headlines and start reading the price. That is the only path from the crowd to the professional.